Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And I was just taking a look at my video history out there in YouTube land, and I'm very aware that the most popular video I've ever made was about a technical indicator known as the market forecast tool. It's only available on Thinkorswim. One thing I didn't do on the most popular video in my history is show how to run a scan to find trade signals from that indicator. So today we're going to be talking about finding and trading signals using the market forecast tool. It is the Thinkorswim exclusive. It's going to be an interesting discussion. I'm going to be talking about variations on entry signals. We'll be planning and placing an example trade today, so a lot to cover. Before we can get to any of that, though, let me first of all say hello to everybody who's chatting in. Great to see all the familiar names. Great to see anybody that might be here for the very first time. But hello there, Eric and Ricebird. We have Will and Andrew and Olga, Michael, Sharon, Alfred, Jack, Chris, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you do happen to be among those who are here for the very first time, welcome to you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy the recording. It's a great way to watch these videos, but you're certainly invited to join us in the live stream audience. And if you'd like to be here, this is a Friday webcast series. We kick things off promptly at 1 Eastern time. Love to see you here. Now, I also want to let you know that my very good friend Kevin Horner is hanging out in the chats with us. Kevin and I have now been working together for years. So we all know Kevin. We know that Kevin brings a lot of experience to this. Great guy. Kevin's just going to keep an eye on those chats. He's going to answer any questions that I can't get to. Thanks for being there, Kevin. Kevin and I would also like to issue an invitation to everybody watching to follow us on social media. You can find your favorite Schwab presenters there on social media, on X and on LinkedIn. You can find Kevin on Kevin on X. You just go to @KevinHornerCS. I can be found and followed on X @CameronMayCS. Or you can pop over to my profile on LinkedIn. Just go to linkedin.com/in/CameronMayCS. But let's get into this discussion of finding and trading signals generated by the market forecast tool. So as we do that, just remember this important information. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and past performance is no guarantee of future results. Oh, let me throw out one more. Investing involves risk, including the loss of principal. All right, so let's set an agenda for the day's discussion. The first thing that we're going to do is get a quick market update. We're going to be looking at it through the lens of the trend value momentum study set that we use each time in this Friday webcast series. Then we'll get to this discussion of the market forecast tool. Now I'm watching exactly 100 people look like they're watching the webcast right now. And so I would suspect of those 100, a good number of you are already going to know what the market forecast tool is. I'm going to go a little bit deeper into the market forecast today, just explain how it's built. That won't take very long. Then I want to talk through 3 potential trade signals that might come from that tool. And then we're going to construct a scan for what's possibly the most popular trade signal. I can't speak for everybody, but I do have a pretty good grasp of the market forecast tool. And I've dealt with a lot of people who use it. And the search that we'll be using today on the Thinkorswim scan function will be looking for, at least in my experience, the most popular signal generated by the indicator. And then we're going to use the search results to plan and place an example trade in our portfolio. I've been gone for 6 weeks from this webcast series, so we don't have any positions right now. We need to start building that back up. And we're going to get started today. Yeah, Ricebird says, Connie's been using this indicator. I was in that chat just yesterday. Absolutely. Yeah, so you can see a variation on the market forecast tool if you're watching Connie's Thursday series. But let's get to this. Let's go to the Paper Money platform. This is the simulated trading environment on Thinkorswim desktop. And we're going to have a look at the S&P 500 just to see what's going on. We can kind of see with the candles what's been happening. It looks like we're working on, I'm going to zoom in here for just a moment. We've had an upward trend on the S&P 500. We kind of pulled back. We did have a lower high recently. I think for some traders, they might be looking to see is that going to confirm with a lower low. Haven't really seen that yet. So lower highs, still apparently rising lows. That would be more of a symmetrical triangle pattern, which is typically seen as a continuation pattern. I think it's interesting. We look at the last couple of days. Trading is still early. There's 3 hours of trading left, but we look at the last 2 candles right now. What might we call this when we have a big red candle at the bottom of a downward move? And then we have a gap down followed by a big white candle that's pushing up through into the midpoint. Now, in this case, the midpoint of the body of yesterday's candle, we've been there earlier in the trading session. We've kind of lagged just a little bit below that. If I were to eyeball that, I'd say the middle point of the body of yesterday's candle is kind of right here. So you can see that we're just a little bit below that. What might we call that? This is a reversal pattern. If we can get up through that middle, it might mean that we're regaining a lot of the territory surrendered yesterday, and some would call that a piercing line. If we're able to pierce the middle of yesterday's candle and stay there. Right now, it might be called a thrusting line. Essentially the same thing. It's just it means that we're coming up a little bit short of that belt line. So that's kind of interesting, but let's back out again here. Both of those are traditionally seen as being continuation patterns of a bullish trend. But let's look at this through the lens of our trend value momentum study set. So let's go over to our studies. I'm going to load up that TVM strategy set. If you're not familiar with this, let me make a recommendation for you. And if you're new to our webcast series, make sure you do this. Subscribe to the channel on YouTube. It's called Trader Talks Schwab Coaching Webcast. You just pop below the video, click on the subscribe button. It only takes a second to do that. It doesn't cost anything to do it. But our YouTube channel is where you can find our live streams like this one right now, or you can find playlists of previous webcasts. So for example, you can click on the playlist, scroll just a little bit beyond halfway down, and you'll find advanced charting techniques. So there's my playlist of webcasts. But the other thing that we can do is just do a keyword search. So for example, if I don't know anything about the TVM, the trend value momentum strategy set that Coach Cam is using, I can just do a search for TVM. It'll search through the archives of previous webcasts, and there is an introduction to the trend value momentum set. The one that I would actually probably suggest is this one, Understanding the Trend Value Momentum Chart Trading System. All right, but really it's just a combination of three indicator types. First of all, we have a moving average combo on price, and then we have 2 oscillators. The moving average combo is intended to identify trend, that's the T. The RSI is a short-term value indicator, there's the V. And finally, MACD is our momentum indicator, M. So what's going on with trend? Well, a typical interpretation of this 50 triangular moving average above the 100 triangular moving average, as long as that 50 is above, that's still seen as an intact bullish trend. So despite this recent pullback, for someone using a TVM system, they might say, well, this is still bullish. Check. That's check for one. Looking for short-term highs and lows, potential value opportunities using RSI, the trader might be looking for that RSI to be dipping and sometimes even below 40. And right now that RSI has been coming down, didn't quite get down to 40, starting to maybe uptick. It is below 50 though, so more leaning toward an indication of value. Is it a guarantee of value? Of course not. But I would say that's probably, let's say, a very faint check for the bulls. And then finally, our MACD histogram trader is typically looking for what we call a red shift. That's where we have a series of bright red histogram bars going down, and then a tick upward into dark red. Interestingly, that is just what we have recently. There's been some choppiness. So we actually had kind of a whipsaw false signal right there that didn't really deliver much in the short term using that MACD histogram approach. But it looks like trend, check, value, check, and momentum may be coming back in. All of those added up, does that guarantee the S&P is going higher? Of course not. But let's just say that our trader here likes what they're seeing on the markets. They think maybe that stocks, after the couple of last pullbacks we've had, maybe they're about to climb, just like we may be seeing an indication of with this now piercing line. Looks like we're getting there. Anyway, so let's use this market forecast tool. It's only available on Thinkorswim, and I want to introduce it to you using kind of a familiar symbol. Let's go up here to our studies. I'm just going to remove all these studies. It doesn't mean delete the study set that I've created. It's just going to clean up the chart here. There we go. So now we're just looking at the S&P 500 chart. And I want to switch over to Apple. And there's a reason. I'll show you why how I found Apple and why we're looking at it today. But I wanted to look at this market forecast indicator. So I'm going to come up here to the little flask icon. I'm going to click on that. And let's add the indicator. We just type in market forecast. We could go down just in alphabetical order, of course, find it under the M's. But I'm just going to use the little shortcut there. Let's type in the name, find the market forecast, and add that to our chart. And I'm going to click apply. And what we're left with is this series of red, green, and blue lines. It's kind of a busy looking indicator. It can be a little bit intimidating the first time we use it. I'm going to show a little technique that may help us to simplify the indicator. I'm going to actually go back up to our little flask, and we're going to modify one element of the indicator. Okay, we're going to click on the little gear icon, and those three lines are known as the red one. You'll notice the key here is red. That's the momentum line. It's a very short term, very reactive line. The blue line is called the near term line. It typically works over a slightly longer time frame than the momentum. And then finally, we have the green intermediate line. And what I'm going to do here is change the thickness, the width of the green intermediate line. This one right here. I'm going to make that a 3 out of 5 instead of just a 1 out of 5. It's going to make it stand out a little bit more. So let me click OK and click apply and click OK again. You'll see how that's kind of highlighting this. So let's talk about how this indicator is constructed now and why I highlighted that green line. And then I'm going to add one more element to this tool. All right. But yeah, we have three lines, red, blue, and green. That's what I'm going to call them. Yes, they're the momentum, the near term, and intermediate. Those are a mouthful when I'm trying to explain it. I think it's easier when we're learning to just say the colors anyway. But basically, our red line, well, all three of them are customized stochastic oscillators used in combination with one another to potentially identify, yes, highs, but also what it's really looking for are quote unquote extreme lows on a chart. And this is the way that this is accomplished. We have the red line, which is an indication of very short-term momentum, really. Typically might be, if it's used in isolation, that would typically be done by a trader who's in and out of a trade in the matter of just a couple or 3 days, very quickly. Our blue near-term line, a little bit longer from peak to peak or from trough to trough, but still pretty quick. This, if it were used in isolation to plan and place trades, it would probably be used by somebody who's in a trade for maybe a few days up to a week, week and a half. That might be kind of a swing trader. And then finally, we have a stochastic oscillator. The green line is quite a bit longer term. It's not truly long term. That's why we call it the intermediate line. But it'll tend to oscillate from high, from an overbought condition to an oversold condition, only very gradually. So it's really intended to identify, these are three oscillators, three stochastic indicators, intended to identify trade signals or overbought and oversold conditions over differing time frames. And they can be used in isolation, but they're not actually intended to be. What's more commonly done is to use them in combination with one another. And the one signal that I already have highlighted here, and I'd like somebody to just chat in. If you know what it is, chat in and let me know, what are these blue ovals highlighting? These are actually some comparatively uncommon, I don't know if I can quite call them rare, but we'll just call them uncommon signals. Let me get that off that oval so it's not flashing at us. What is this when we see all three time frame oscillators slipping down low all at the same time? Some of you might know it as a cluster. There's a specific definition to a cluster. So I'm going to draw in. This is the other, it's not a modification to the tool. I don't really do this except when I'm teaching this tool. But I'm going to add a line at the 20 level, because for stochastic traders, commonly they'll identify as a value dipping below 20 as what we might call an oversold condition, or it's also known as the lower reversal zone, because there's an expectation that the indicator might reverse from those lows and go up, and maybe price will too. And with each of these three, just so you know, they can never get under a value of 0. They can never get over a value of 100. That's just typical of a stochastic oscillator. So let me just whip in a line here right at 20, just as a visual reference point. It's really not necessary to do this. I'm only doing this as a teaching device. But it does allow me to show a quick little nifty technique. When we're drawing using, and notice I selected the price level tool here, the one with the $ and horizontal line, I can just click anywhere on my chart, and we just whip in a line here, and as I click again, this randomly is positioned at 35.64, but I wanted it 20. Once we've drawn a line on our chart, we can right-click on it and edit its properties, including its position or its value. So I'm just going to change that value to 20, click OK, and now we have a nice reference line right at 20, and I'm going to use that line plus the thick green line to start to identify these clusters. So again, just to repeat how we identify a cluster, it's when all three lines are below 20 at the same time. Well, since the green line is the one that goes down under 20 the least commonly, it might be helpful to just focus on that first. Because for all of these first, 6 months of the last 12, the green line was above 20. No point in looking for the red and the blue to be under 20 if the green line isn't there. So our cluster traders, and these are our really stickler by the book cluster traders. I'll talk about some variations on a cluster theme in just a moment. They wouldn't even look for clusters. If the green line's floating up here, there's not a cluster to be found on this chart. But when that green line starts to dip down, it may be indicating that prices over a longer period are going through, let's say, an unusually large retracement. That's what it might be showing us as we're going from above 80 or just in between 20 and 80, up in that upper reversal zone. Now we're getting down below 20. As soon as that thing enters below 20, our cluster trader might look to see, well, are the shorter term indicators also there at the same time? And I can actually see that. So it's nice to be able to visually see. Let me zoom in on this so you can see it a little bit more closely. Okay, so here's what we were pointing at before. Yes, I can visually confirm that on this day, so let me position my cursor there, that would have been January 6th, all three. Art, you've asked a question there, and yes, some traders will wait for just that, but not always, not always. Anyway, I can see that all three are below 20. Sometimes, though, it requires some squinting. Sometimes one of them gets just to 19, it's barely below. It can be harder to see. So another helpful device, another helpful practice might be to just position your cursor where you think there might be a cluster. Is there a cluster today? And then look at the numbers just above. See where I'm pointing at, where it says market forecast? If you look at the red number, it says 1.52. That's definitely below 20. The blue line says 5.54. That's definitely below 20, and the blue number. And then the green number says 18.86. Is it below 20? Yes. So on that day, our trader might say, that's a cluster. And now to go to Art's question, for some traders, that actually, just the mere fact that all three are hitting below 20 on the same day, their assumption may be, well, if all of those time frame oscillators are at fairly extreme lows at the same moment, maybe there's nowhere for this to go but up. Well, that can be the case for the oscillator. It can actually go sideways. Not much room to go down anymore. Doesn't necessarily guarantee that price will go up, and I'll show you some examples of when it didn't. But no indicator is perfect. All right. So for some traders, they just take the trade right then. For others, though, they'll wait for that green line to just at least do an uptick. So I think that's what Art is referring to, a little bit more of a bullish confirmation. There can be advantages to either of those approaches. There can be disadvantages. If we're waiting for that uptick and it takes a few days, meanwhile, the stock price is running away from us, it might leave some profit potential on the table. On the other hand, if we get in right on the cluster, maybe we're a little bit premature and the stock continues to go down. Of course, there are risks when trading. So thanks for bringing that up, Art, but I do want to zoom back out just a little bit. I want to emphasize with this very first signal on Apple, notice we've only had 3 so far in the last 12 months. They don't happen very often. With this signal, did it work out? If we were to take any sort of a bullish position right here, this is telling us, hey, Cameron, it looks like this stock has reached extreme lows in a way that, at least according to this technical combination, that we haven't seen in the last 7 months. Oops, it didn't work out. Notice we continued down. That's a failed cluster. Now I have a note right there. See where it says red and blue? You can't quite see it. Are greater than 50 is what I have, the greater than or less than sign facing the red and blue. So it's red and blue are greater than 50. If there's a false signal, maybe the trader takes some losses and they wait for the next signal. Now the thing is, sometimes our oscillators can hang out down below 20 and they can generate a whole choppy little series of signals that can lead to a bunch of whipsaws. Getting in and getting out, getting in, getting out, none of it productive. So instead, what the trader might wait for is, did at least the blue line and the red line go back above 50? Did the stock take a breather and allow those shorter term oscillators to go up and then come back down below 50? And in this case, you'll notice the red and blue from this one failed signal, they did get back up above 50 and then came down again. And so then the trader might say, all right, that one wasn't fun, the original trade, but we have another follow-up signal. And in this case, we got another cluster right here on January 16th. Was it 16th? Let's make sure. Yep, January 16th. And then you'll notice price did a pretty good job of rallying from that point. That's what that trader is hoping for. And then looks like our next signal came over here on March 30th. Another pretty good cluster low. Notice this does a pretty good job sometimes of identifying lows. That's a tough thing to do when a stock is working its way down, trying to anticipate which one of these red candles is going to be the red candle that actually is at or near the bottom. That's pretty tough. Market forecast is designed to potentially help with that. Sia says, was the blue line drawn or is it part of the indicator? This one right down here, I drew it on there. If you want to go back and watch the archive of this webcast, you'll see me do it in the first, I don't know, 10 minutes or so. Maybe it was a little bit later than that. But so there's another signal. And in this case, it did a pretty good job of forecasting. Now, is it the reason that Apple went up? No, of course it's not the reason. Could Apple have gone down again from here? Yes. But when a cluster is achieved, the trader might make plans to take profits if profits arise, take losses if we get another one of these things. So how are profit targets established using this indicator? A couple of different ways it might be done. Number one is if we're able to get up above 80, looks like did we reach above 80? We did with the green line. I'm going to whip in another line up here. Let's draw in a line at 80. Let's edit the properties of that. Make it 80. Click OK. So some traders will let the indicator generate the target. They don't know where the price is going to be in the meantime, but they might watch for Okay, if that green intermediate line is below 20, as are the other two shorter term, well, then we're going to wait on our entry. We take our entry and then wait to see if that green intermediate line can get back up above 80 and exit. And in this case, it looks like we did that right about, didn't quite get there. We got there here. All right. Let me put an oval over that. Let me make sure that I get it right. Yeah, it was right here. Now, another way that a trader might establish a price target, this isn't truly a price target. This is sort of an indicator target. Doesn't tell us which price. It just tells us what to be looking for on the indicator. Well, if we want a price target, a common approach is to just look at previous price highs. So it looks like we had a couple of highs here. There was a high here, maybe split the difference. And that may help establish a target. Weil says, how does that compare to RSI? Well, these are a combination of oscillators. RSI is a single oscillator. Similar, I'll tell you, with one oscillator to the next, MACD, RSI, stochastic, CCI. To me, I compare those to like, well, that's kind of like the treadmill versus the stair climber versus the recumbent bike versus the elliptical. All of those are cardio equipment. Oscillators are all sort of short-term buy and sell indicators. So there definitely is some overlap, but we also know that a stair climber and a treadmill are also two very different pieces of cardio equipment with related pros and cons. So what a trader is probably best to do is just pick one. It's not my place to say which one someone should be using, if any. Not everybody uses technical analysis, but just pick one, treadmill, stair climber, or I don't know, RSI or market forecast or whatever, and just run it through a series of tests and see if it works for you. All right. And then another thing you might, and by the way, while you probably are wishing I would do like a side-by-side breakdown. That takes too long. Then I have to explain. Sia says most are lagging indicators. Let me make a controversial point here, Sia. My argument would be that anything that appears on the chart is a lagging indicator. Some people will say, no, my special indicator is a leading indicator because it goes out ahead of price and shows, and it highlights the path with a big old bright beam. Now, technical indicators are built on historical price and volume and other things like that. So one might claim that their special indicator shines the way for price, but nobody knows the future. And usually for someone to claim that a technical indicator is a leading indicator is it's a marketing ploy, right? And I'm not trying to market anything here. I don't care whether you use these indicators or not. My job is to be an educator and to explore the pros and cons and how these things are they typically work. But now that's not to say that there are no leading indicators, but they tend to be more like in the world of economics. Things like let's say building permits, housing permits, a leading indicator of housing units to be built? Yes, that's a leading indicator. But a technical indicator on a chart, it's a lagging indicator. So thanks for bringing that up. I think that leads to kind of a valuable suggestion. Did we just get a survey, Kevin? Oh yeah, thank you. Let me hit a pause on our trading here. Then we'll come back and run a scan for these things. But Kevin did just highlight that there's a survey in the link for our live audience members. So if you'll do me a favor, if you're here in our live audience, click that survey link and then fill out the survey when we're done and you can give me some honest feedback. I'll just tell you, I always take the time to read through that survey. I read through your comments, I read through the survey data, and it always helps. So they're just 2 questions to answer, and then and then a comments box and a suggestion box. But I do take the time to read through that. Thank you for doing that. But back to the discussion. So what we're looking at is a traditional cluster. All 3 lines being below 20 at the same time. We've discussed where to take potential profits, 2 different ways to do that. Where might we take losses? Well, quite commonly when there's a cluster signal, it's supposed to be, by design, it's supposed to be precise. Of course, that doesn't mean it always is. But for some traders, they have very little patience if it doesn't work on the first day or two. So they may place a stop or an exit plan just at those days' lows, maybe at the previous day's lows if those were a little bit lower, something like that. Not being too patient with this indicator. Because if it fails quickly, maybe we just get out, see if it generates another signal, and maybe get back in again. Now, this is a traditional cluster, and there are lots of sticklers for traditional clusters. All three lines must be below 20 on the same day. Not everybody's quite that harsh with their definition of a cluster. They might say, well, as long as they're all within a 24-hour period. So maybe we got 2 under 20 on Tuesday, and the third one went under on Wednesday. They're all at least in there within 2 trading sessions, or we capture within a 24-hour period. They might be fine with that. There are lots of near misses, not lots, but it does introduce at least a few more potential signals. And then finally, there are still other traders who might use much shorter term signals. Let me see if there's a recent example. Yep, there's one right here. And this is what I might call a minor cluster. Let me zoom in on this. Zoom in on recent Apple activity. And what we have right here back earlier in June, we're looking for something that's far less common. And that is when we get the red line and the red line and the blue line below 20 at the same time. And as they start to uptick, that may be an entry for a shorter term trade. Happens much more frequently than a 3-line cluster. This is basically a 2-line cluster. And so in this case, we might be looking for the red line, well, the red line and the blue line to uptick from a cluster, from a mini cluster, a 2-line cluster. And then look for near-term highs as a potential exit, or maybe watching for one of those lines to get above 80. So there are some variations on a cluster theme. I'm going to stick with the more sort of hard line, got to get all 3 below 20 at the same time. That doesn't happen all that often. So it's helpful to have a scan for that. So what I've done is I built a scan for it. So let me go show you how that was built. And I'll share it with you too. But let's go, I'm going to take us over now to the live platform. You'll notice the color scheme changed. I do have Paper Money open and I have the live platform open. You can actually, if you already have, let's say, Paper Money open, you can right click on your Thinkorswim icon and select Thinkorswim again, and it'll let you log in again, but you can log into the live account. I don't know if you knew that you could have Paper Money and live open at the same time. You can. One suggestion I would make is change the color scheme for them and be consistent with that. So for example, my Paper Money is always the white background. My live platform is always the dark background, so I don't get them confused when I have them both open. So here's our live platform, and I've gone to the scan tab, and this is just a blank scan. So let's build a scan for the 3-line market forecast cluster. None of these stock filters are going to be used in this scan. So I'm just going to click the little X's and get rid of those. And instead, I'm going to use a combination of 4 studies. So I'm going to click study. Let's add a filter, a study filter, a second, a third, and then a fourth. These first 3 are just going to be our market forecast lines. So we're going to be doing some custom scanning. So let's come over here to study. I'm going to choose custom. We're not going to use an ADX crossover because that's not what we're trading today. So I'll just delete that. We're going to add our own study condition. So let's add our condition. It is a study. It's a technical indicator or a study. And we're using the market forecast. So let's select that as our study. And the first line that we're going to use is the momentum. Let's sort for the momentum line to be under 20, at least within the last, let's say, 24, 48 hours. So momentum, we want that to be less than a value of 20. Now, if we leave this at 1 bar, that means it has to be under 20 today. Let's say, well, as long as it was under 20 within, today or yesterday. And let me just save that. And then we just repeat this process with the other 2 lines. So let's click OK and create another custom study. But this one, using market forecast again, we're going to shift the momentum line to the near-term line. And we want that to be less than this. So the momentum, I know if you're getting used to this, the momentum is the red line. It's got a lot of momentum. Near-term line, it's still pretty close to near-term. It's the blue line. The near-term line is less than a value of 20 within the last 2 bars on a daily chart. That's within the last 2 days. And then finally, we need that intermediate line. So custom. Let's delete this, add our condition of the market forecast study. Intermediate line, less than a value of 20 within the last 2 bars, and save that. So as we click OK, we can now see, okay, our screen is going to look for the momentum line to be less than 20, the near-term line to be less than 20, and the intermediate line to be less than 20. Now, for some traders, though, when we run a scan just like this, we'll get a few results, but then we look at charts, and these are stocks that are just going down and down and down. They were $100 12 months ago, and now it's a $10 stock, and the stock is just really struggling. So I'm going to add one more filter for those that would prefer to have something. Yeah, they're going to be pulling back. For a market forecast cluster to happen, the stock needs to pull back. This is never going to find something at highs. It's not designed to do that. We're looking for lows, but maybe not within stocks that have just been struggling and struggling and struggling. So I'm going to use a final filter to filter out those kinds of stocks. And we're just going to use our price performance filter. And I'm going to choose near high lows. So we can look for stocks that are near 12 months highs or near 12-month lows. But I'm just going to require that our current price of our stock is within 20% of the 252 day, this day over here. 252 days is basically an average 12-month trading year. Okay. So current price is within 20% of the 12-month or 252-day high. Now, what this would mean, is that, if we had a high of 100, this might be anywhere between 120 or 180. What it's not going to find is something that was at 100 and now it's at 10. Just filters those out. So let's run this scan and see what we get. Oh, one other thing I want to do. We could run this in all stocks. I do want to run this just in, that scan's going to take a little while, and we're going to get quite a few results. Let's narrow this down to just S&P companies. Okay, so we'll scan that again. There we go. So it looks like we have a few. Looks like BlackRock probably just snuck in there. I was already prepared to discuss these other 4. Maybe time permitting BlackRock. I don't think we're going to have time, but let's go back here. By the way, what's right here? There's Apple. This is how I found Apple. I did a scan. So I will, as I mentioned, let's share this scan, and I'll also put it in the session notes. If you're watching on the archive, I'll put it down in the description for you. But let's share this scan. And I'll pop it over here for the live attendees. I'll also pop it into my session notes to make sure that I share it with with those that watch the archive. And I'll just call it something, it'll say something like, here's my market forecast cluster scan, something like that. So look for that in the description down below. But I just want to take a quick peek at some of these stocks. Let's zoom back out here. Not zoom in, hitting the wrong button. So there's Apple. We learned we learned about the market forecast cluster using that. Let's pop over to PFE. PFE, you'll notice there was a signal right about here, not too bad. Here was a whipsaw. That was a failed one. We wait for the blue and the red to get above 50 again before we look for another signal, which happened here. Didn't quite work. This one kind of chopped around for a while, but PFE is now down, giving us a signal not today, but yesterday. So it was saying yesterday might be the high, or it might be the low. Today, it's kind of working out that way. And interestingly, there's kind of a longer term support here. So maybe that'll be our trade today, possibly looking to get back up to previous highs. How about we do that? But there's also Amazon. Here, we had a failed signal, rally above the 50. So we have a new signal there. Should we do Amazon, or should we do PFE? Notice both of these are stocks that have come down a significant extent. How about let me switch back over here to Amazon, get another quick look. You know, Amazon's kind of trading just above, maybe off of these lows and these highs. How about we buy Amazon? Let's buy Amazon. Looks like a recent high might be up here at 250. Let's use that as our target. And a stop maybe down there at around 220-ish. It looks like we're getting some votes for Pfizer. You guys are saying Pfizer, huh? All right, we'll do Pfizer. Where might the target be? Might be up here. Should we try for 26.5? With a stop down here below 20, we'll put that down at 23. Okay. So with Pfizer, we typically spend maybe $10,000 on a trade. Let's see, 100 shares would be $2,400. Let's do 400 shares of Pfizer. So I'm going to click on the ask price and place a custom buy order with an OCO bracket for 400 shares. Let's link those orders together. I'll put it in a market order with a target up there at 26.50 and a stop down at 23. And with both of those, we want those exit orders most likely to be good till canceled, so they don't just expire at the end of the day. So let's click confirm and send. We're buying 400 shares of PFE at the market. We're using that to see if we can get a quick fill. Obviously, there are risks when using market orders. We're going to have a limit up at 26.50, stop down at $23. That stop is not a guarantee that we will sell for exactly $23. Could be less if the stock is falling hard. No commissions on this trade. Can be on some types of trades. And we send that order off. There we go. So I just sent that order off. We'll follow up on that in upcoming sessions. But guys, we've accomplished what I set out to do today. I wanted to talk through finding and then trading trade signals used on the market forecast indicator. I hope this has been an interesting discussion for you. Really enjoy these Friday webcast series, so I hope that you'll see me again next Friday. But it's time for me to let you go to enjoy the rest of your webcasts and get into the weekend. But as you do, just remember, if you haven't subscribed to the channel yet, please do that. It's a great resource. This is where you can join the live streams. You can find our playlist for previous webcasts. You can also even do custom little keyword searches like we did earlier today. So pop down below the video stream, click on subscribe. Doesn't cost anything. It only takes a second. Now, Kevin and I would also suggest that you follow us on social media. You can find and follow us on X or on LinkedIn. You can find Kevin on X at Kevin Horner CS. You can find me on X at Cameron May CS is my handle there. There it is right there. And if you reply to one of my posts on social media, I just try to reply right back to you. So that allows for interaction when the camera's not on. So you can find me on X, or you can pop over to LinkedIn. Just go to linkedin.com/in and then /Cameron May CS. That's where you'll find me. Just reply to my post there. And there's that interaction again. Now, this is also quick heads up, final reminder, fill out that survey. Kevin has reposted that survey link a couple of times in the chat. Click on that survey link. Just 2 questions, comments box and a suggestions box. It never goes to waste. That information is forwarded right to me and I read through it. So thanks for doing that. Finally, thanks for all the thumbs up. I see that we've got 146 people watching the live stream right now, and 57 have already clicked that like button. That helps. It feels good. It also gives my video a boost in the YouTube algorithm. So thanks for doing that. Everybody, have a great weekend. I will look for you in a future webcast. I'll also look for you on social media, on X and on LinkedIn. But whenever I see you again, till that moment arrives, I want to wish you the very best of luck. Happy trading. Goodbye.